100 shares?
500 shares at $12.50 on Alcoa. That's a drop-down bid at 12.5. This is an after. Okay, here. Yes, 12.5. We'll see what the report is. If I'm going to be selling short, I'm going to be about $3.50 up into the market. Do what?
What's the route on that one?
We had a 488,000 share block come in. This is an after-hours tick chart. I've got lower bids with me and the MMTs. Okay, got those limit orders out there. We don't know what they got to say. We will be updating it here in a moment. And we'll see what they got to say. Okay? Limit orders are going to be down there. We'll see if it holds 1350 also on a drop-down bid. Remember, this is live. This is before the fact. This is before the report comes out. It's due out anytime. I've got a knee-jerk reaction right now here in Alcoa. You can see that big bar down. I'm going to go look and see if I can find the actual earnings report. There it is right there. This is going to set that tone. No, it was down 47 cents on the day. I don't know what they have to say. I haven't got the report yet, but this is just a knee-jerk reaction. New MMTs, this is how earnings happen. They dropped it down, and then they popped it right back up. They just came right in line. 32 versus 32 forecast. What the upside guidances will be, it's an inline report. That was the big drop. That came right up, and the shorts came right in, all within a 3, 6, 9 minute period on a knee jerk. Alcoa doesn't never move a lot of MMTs. It's 32. Wait a second. I've got a prelim of 32 versus 33. I've got revs of 6.59 billion, so they did good on the rev versus 6.34 billion. Capital IQ consistent estimates. So basically, it's not that bad of a report for Alcoa because they did better on the revenue slightly. But the prelim was 32 versus 33. Now we'll have to wait for the conference call. So that's the pop-up. The market's looking for any good piece of news, and we'll update the conference call. And one thing about it is it sets the tone for what that bear and bull is going to think about the rest of the earnings. This is the first one, and it just reported here and now.
The world works also in a way in self-fulfilling prophecies. We continue to see a strong demand in those areas that I mentioned, and we found ways to cope with the headwinds. We will not let that loose and continue to fight our way as hard as we can. We have very clear profit targets that we are following, and I think the solid performance that we've seen so far over the last quarters, we will continue to maintain that.
Klaus Kleinfeld, thanks very much for taking the time speaking to us before the analysts. We very much appreciate it.
All right, that was a CFO of Alcoa there talking about the growth and about what aluminum is doing and whatnot. So we put that there so that people can understand how important it is where these earnings are around the world, as we have covered. So in our view, it's a okay report out of Alcoa. At least they're executing well. That's going to give the bull a reason to want to get bullish now. But just remember, it's the sector of it's in the aluminum. So that tells us if aluminum's doing well, that copper in itself will be doing well. So that will give people a reason to be bullish tomorrow morning, and we'll probably have a gap up. Okay? As far as the report goes, they're saying that Alcoa projects that from 2010 baseline aluminum demand will double by 2020 on 6.5% annual growth. Okay? They also talk about continued growth in all major end markets on a global basis. They're talking about their global basis there. So they were able to offset. When you take a look, when you really take a look, the quarterly revenue was up 11%, higher aluminum shipments up 8%, and higher realized pricing for both aluminum up 7% and aluminum up 6%, along with improved productivity, continued strong growth in major markets served by mid and downstream businesses. Okay, That's the important thing. One of the things that helped them a little bit, in my view, was what they do over in China. Okay? They have a presence around the world, so we'll get more into that. But building and construction was minus 1.3%. Packaging was down 2.3%. Here, commercial transportation, 7 to 12% minus, and including aerospace at 7%, and 4 to 8% in the automotive. Once again, for the bull, it's a good case to start the earnings season out with Alcoa executing fairly decent for a change. And that the bulk of these revenues had come out of different areas around the world. U.S. was a little bit slower. Internationally is what saved them.